Good morning, everyone. I can see there are still people joining, so we'll start very slowly to give others the chance to be here from the beginning. Maybe some housekeeping rules first. We have put everyone on mute, and you will have the opportunity to ask questions. We hope there will be some time at the end to answer them. Please put your questions into the chat and we will look at this at the end. And I would also like to make everyone aware that this session will be recorded and we will be happy to distribute the link once all the cleanup work is done after the webinar. Let me briefly introduce myself. I'm a partner in the energy group of Watson, Farley and Williams in Hamburg. I'm dealing with regulatory matters, especially in the energy sector. And I have been involved in a number of offshore wind deals from the corporate side, from the financing side, also from the project side, and especially I was happy to advise in the recent auction round here in Germany. And I'm very happy to be joined by Dominik Huebler today. Dominik, if you would like to introduce yourself.
Yes, thank you very much, Christine. So my name is Dominik Huebler. I'm a director in NERA's energy practice in Berlin. For those of you who don't know NERA, we're an international economic consulting firm with a focus in the energy sector, and my practice has a lot of focus in offshore wind in particular. A lot of our recent work's been in offshore wind auctions like the one we'll talk about, and we've helped people win auctions not only in Germany but also in Ireland, the UK, the Netherlands, and the US recently, working on bid strategy, competitor and market analysis. And sort of when we're not dealing with auctions, we're also helping regulators and politicians design regulatory frameworks and auction schemes across much of Eastern Europe and as far afield as the Philippines. Beyond that, we can also help with policy, regulatory and commercial due diligence and regulatory disputes in litigation and arbitration. But the focus of today is obviously on auctions. So without further ado, I'll hand back over to Christine, who can take you into the legal framework and the results it created of these German auctions that created some quite astonishing results.
Thank you, Dominik. It's really great you can be here today and share your economic insights. Because usually in these webinars, we talked a lot about the legal system, about how this works, what participants need to be aware of to make sure that nothing goes wrong. Whereas now we do have the results. We will look at those in a minute. Nevertheless, I would like to give an overview of the legal framework. We have quite a large audience today and quite a diverse audience. So some of you will hear things that, of course, you already know because you have worked on these auctions. But we have a number of participants who maybe do not have this background. So I'd like to give the legal rules. Then we turn into the economic analysis. And finally, we will look at what could be changed in the auction system, maybe to make it work even better. Now, if we could turn to the first legal slide, please. Here is a reminder for those who are not so closely involved with the German auctions. We currently have two different auction systems in Germany. One is for sites that have been pre-investigated by the authority, which means that certain assessments of the seabed, etc., have already been made. Whereas what we are talking about today is the auction for sites without such pre-assessment. The two systems mainly differ by the award criteria. In the auction we are talking about today, it's price as the only decisive factor, whereas for the pre-investigated sites, there is a kind of beauty contest where you can win points by aspects such as the use of green energy in the production of the wind turbines or the contribution to a skilled workforce. That auction is currently ongoing. Bids are in since 1st of August, and the regulator now has up to 4 months to grant the awards. And potentially we will look at this in a different webinar. Today's system is also not that easy as it turned out, because the regulator has published 100 bidder questions in advance, lots of details where people try to understand how the system worked. The auction related to 4 sites, 3 of them in the North Sea, 1 of them in the Baltic Sea. And as you all know, the auction has achieved record results. Can we go to the next slide, please? Here you can see just the location of the sites, especially the North Sea sites are really far out at sea. I think it's like 170 kilometers from the coast. And now if you could turn to the next slide, please. Here you can see the result of that auction. You have 3 huge North Sea sites with 2 gigawatts each, and 1 in the Baltic with 1 gigawatt. And you can see 2 bidders were successful, 2 groups of bidders, BP and Total Energies. So we are happy to welcome the oil majors to the German offshore world. And you can see the amount of the winning bids in million euros per megawatt, and also the total amounts that add up to 12.6 billion euros, which is quite unique even compared with other offshore auctions we have recently seen abroad. I have been asked if it would be possible to find out the names of other bidders or their bid amounts, for example, by applying to the Federal Network Agency under the Freedom of Information rules. And I have to say, I don't think that this will work. Some bidders have made public that they were involved, but you will not be able to get this information from the authority, and especially not any commercial information, which will be protected as business secret. And I would think also from a competition law aspect, it would be quite difficult to disclose this to competitors. Can we go to the next slide? Yes, thank you. What we have in this system theoretically is still the market premium model. So bidders would have been able to obtain subsidies as a market premium. However, all the bidders submitted 0 bids, and so no one will get any subsidy, and in the opposite, you have seen these huge payments. it was required to show a declaration for PPAs to be in place. However, this is not part of a beauty contest. It's just you had to show this to be eligible to participate in the auction, but you didn't get any points for having a very nice PPA. An important aspect is the security that needs to be paid, or a bank bid bond you needed to provide 25% of the total amount before the auction, and the winning bidder now needs to bring the remaining 75% after the award. And the amount for these huge sites is quite high because it's 100 euros per kilowatt of capacity. And the interesting bit about this new system is what is known as dynamic auction, namely the procedure to determine the payments that the winning bidders now have to make. Please, can we go to the next slide? There was an electronic procedure, and with relatively short bidding rounds and a large number of bidding rounds, because the auction didn't work in the way that the bidder would simply state the final amount of payment, but there were what is known as bid levels that were set by the authority and that increased in every round. So the bidders basically had to confirm that they would be willing to pay the next bid level, and then the next bid level, until after about between 50 something and 70 something rounds, I think it was, we had the final results. And with this system allowed the bidders to get at least some insight on the competition, because they would be informed about the remaining number of bidders, and also the relevant bid level could give some indication, because if one bidder dropped out, then the next round the bid level would be a bit lower, and so there was, yes, this was designed to give bidders at least the possibility to get some information about what was going on. Next slide, please. So what will happen now is that the bidders will have to provide the remaining bid security, and they will have to make the first payment of this second bid component, these total 12.6 billion euros, 10% of which must be paid within 12 months. And the remaining 90% will be payable in annual rates over a period of 20 years. And what does the winner get in return for these big payments? It can use the site for 25 years with a potential extension of 10 more years. It will have a right to grid connection, and the German system works that way that the grid connection is constructed by the TSO, also paid for by the TSO, and finally the electricity customers. And for project development, the winning bidder still must obtain a permit for the wind farm, and it will have to meet certain milestone deadlines for the project development. Otherwise, the consequence would be penalty payments, which are secured by the bid bond, and ultimately the risk of losing the award if the project doesn't proceed as it should after these legal rules. So this is meant to be a safeguard to ensure that these projects are actually going to be built and in the time frame as envisaged. Next slide, please. So I hand over to Dominik after this introduction to the legal system to provide the insights about what actually happened in the German auctions and the international context.
Thank you very much, Christine. So yes, as you can see here, this German system that was set up ended up resetting the scale as far as lease fees per megawatt are concerned, which is interesting because back in March, when I gave a similar webinar at the BWO, and where I did a sort of trial simulation of what the auction might look like, all the discussion I had with stakeholders afterwards, when I used the UK as an example and predicted that there might be 41 rounds and civil servants at the BNetzA might spend half their summer holiday administering this auction, most of the discussion then was around, you're scaremongering. How the hell can it be going so high? Turns out I was not scaremongering. And I mean, there are some very obvious rational expectations for why you might bid higher in Germany than you would in England and Wales, as I should say, rather than the UK per se. The most obvious one here is the more NPV-friendly structuring of the lease fee. Christine already mentioned it, because you're paying most of your lease fee during the 20 years of operation rather than during the years before the project starts construction. That means that actually the net present value of these numbers that we see here, and the 1.8 billion in the middle, is less in NPV terms than if sort of comparatively less in NPV terms. It's still more in NPV terms than what you get in England and Wales. There are a couple of other things that are helpful in Germany. The grid connections included. Christine already mentioned that you've got power price upside, you've got very large sites next to one another, so there's definitely potential for synergies here. Apparently, there's also a strong love for the home market. If you follow BP's press releases, several senior executives in BP are German and apparently really wanted to get involved in the German market. So all that outweighed the additional cost of financing and steel that almost certainly came in between 2021 and 2023. And this is where we are. Record auctions, big ringing endorsement by two large energy majors in the German energy sector. And over the next couple of slides, we'll explore a bit more about what that may well mean for the German energy sector. Just before we sort of dig into that in more detail, the other thing that was perhaps interesting was that the German auction broke a trend of auction values coming down a bit. So if you look at the two flags that you may not immediately recognize, the blue one, third from the left, is New York State, and the one with the bear, third from the right, is California. What you'd seen in the US is a significant drop, and it doesn't just apply to California. There's a similar auction in Carolina where bid values had gone down very materially. And the very nearest auction that closed before the German auction is the Lithuanian auction on the very right, which closed with some very low values per megawatt. Now, obviously, Lithuania is not Germany, and there are a couple of features in the Lithuanian auction design, especially limited pipeline of projects that come after this one, very short, very uncertain timeline and auction process that made this very low. But I mean, this is the bandwidth that you're getting from different auctions in the same body of the sea. I mean, there are Baltic Sea sites in Germany, and there are Baltic Sea sites in Lithuania. And I'll close my talk with a discussion of what auctions are coming up and what to look out for if the big financial slugfests may not be what you're after, and what the kinds of risks are that you are taking. So before we move on, just a quick look at one other feature of the German regime. And that's the question, where does all that money go that's been raised? The first 10%, which are going to be paid during the next year, are going to marine protection and sustainable fishing. They're being directed 50% each through the Ministry of the Environment and the Ministry of Agriculture, and they'll be allocated to purposes under those headings, marine protection and sustainable fishing. The remaining 90%, so still over 10 billion euros in total, are going to go to reducing grid charges for German energy users. For those of you not intimately familiar with how German grid charges are calculated, that means they are skewing towards helping households. We did a sort of quick back of the envelope calculation. At current prices, that's round about 100 million free megawatt hours of, or the equivalent of 100 million free megawatt hours in power that you can buy from these contributions. That's 30 million families of 4 getting free electricity for a year. That's clearly a solid vote winner, but still we'll take liberty at the end to take a look at what else you could have done with that money. Let's move to the next slide for the moment, and let's take another look at what else contributed to the very high prices in Germany. It's a price-only tender. If you tell someone, I'm only going to rate you on how much you pay, you can imagine that the people who are best able to pay turn up, and that they'll find the financial reserves to go out and win this tender. I've already mentioned the NPV-friendly payment terms. I've already mentioned there were a large number of sites, large sites, combined with a strong track of future auctions coming up. So this allows you to build a bridgehead, essentially, and it allows you to build a large operation on a sort of stable outlook. That will have helped. It includes the grid connection. I think I mentioned that one too. There were also some slightly less obvious things in the actual design of the dynamic auction that will have helped with the high pricing, some for good reasons, some less so. The first thing here that's worth mentioning is that there's no cap on the number of sites a bidder can win. That was a pretty controversial topic when the law came out last year, because there were some concerns about monopolization. Given the size of the German power market, I'm not totally sure how valid the concern of monopolization is here. And I think in the end, what we saw is we didn't have an individual bidder winning all the sites, but we had 2 bidders winning. That said, it is unusual. In the UK and the US, which both had dynamic auctions, we had caps on how many sites an individual bidder can win. Introducing such caps, or in the German context, not introducing such a cap, does 2 things. It genuinely increases demand, which can increase the aggressiveness of the bidding, but it also makes it harder to figure out when actually there isn't really excess demand anymore, and people could settle on a site each. And that was made explicitly stark by some of the other features of the German regime, which was its lack of transparency and the fact that you could not switch from one side to the next. If you wanted to retain your chance of winning a site, you had to continue bidding for it, which then created a risk of demand collapsing in one go if you had one bidder winning the amount of capacity that they wanted. Now you may ask, is that a problem or not? Or wouldn't, as the household or as the German politician, wouldn't I like this kind of system where it creates very heavy demand and possibly even creates artificial demand? Well, it does create risks in the sense that if you end up seeing a demand collapse, what happens is people may end up with more sites than they're actually able to develop, which puts execution at risk, something that we saw in the German mobile spectrum auctions back in 2000 when the 3G licenses were allocated at absolutely stratospheric prices. And then because bidders and their advisors know about this, the mitigation in such a system like the one that we saw in Germany can be bidders dropping out earlier than they would have because they're afraid of winning too much. And that's where the dynamic auction design was problematic ex ante, even if sort of looking at the results, it looks like this was less of an issue here in how this auction played out. Simply, if we're looking at the one instance where two auctions closed very close to one another, they fell to different bidders, and the bidder who won the second of those auctions carried on bidding on the remaining sites. So looking outside in, there was no obvious evidence that this bidder was concerned that they'd won too much. Obviously, none of this is to say that this couldn't happen if we do this kind of auction design again. But sort of going from here and going from what may sound quite theoretical, let's go to something quite hands-on on the next slide, which is taking a look at how the stock price reacted to the news of this auction closing. And here we've got the two winning bidders shaded in green, and we've got three of their sort of natural peers in blue. We've got two dots here. The first set of dots is essentially 3 hours after the news broke. So it's a kind of raw first reaction by the markets. How did the market react? Well, for one of the bidders, we see very little movement. Total Energies share price stayed pretty much where it was before the announcement. For the other bidder, for the other winning bidder, BP, we see a slight reduction. If we look at some of the comparators, some of them are doing marginally better. Some are doing in line with what we're seeing for one of the winning bidders. There's no obvious shock here by the market of, oh my God, these guys overpaid. And there's no sort of obvious jubilation of this is the best thing that happened since sliced bread. If we take this thing forward and give the market a bit more time to digest the news, actually what we're seeing here is all the energy majors that we're looking at are losing a bit of value between what was the end of Wednesday, I think, and Friday evening, which is the cutoff date, 2 days after publication that we're using. And they're even more sort of moving in line. So even though these big amounts of money were being spent, the stock market seems to have been pretty relaxed about this. No, no major reaction sort of upwards or downwards relative to the peers. Interestingly, what we do see is if we're looking at some of the other energy companies that might have been participating, RWE and Ørsted, the immediate reaction for them is very similar to what we see here for Total and Shell. Very little movement by the end of the day, but then a sort of slight move in a positive direction by both of them at the end of the week. Now, obviously, if you're looking at stock prices over the space of 3 days for big energy companies, a lot of things may have happened. And the fact that people with more hydrocarbon exposure are down maybe due to a bunch of different things. And the fact that some with less hydrocarbon exposure are up, again, maybe due to a bunch of different things. Not immediately obvious that the stock market thought that this was a big deal one way or other. That said, still a hell of a lot of money that went into this. So let's move to the next slide and let's take a look at what you could do with all that money. And let's start on a light-hearted note. If you're an art collector, you can buy a hell of a lot of art for this. The 10 most expensive paintings 5 times over, wash. But then that wouldn't create any green electrons. So let's take a look at something more energy related. And somehow that becomes a bit sobering. All that money and you get less than 1% of one of the world's biggest energy companies for it. If you look at a bit closer to home and you look at what's the amount of money that Total and BP spent relative to the market caps, we're more in the sort of 4 to 6% range for each of them. So major investments, but not sort of earth-shattering in the sense, and certainly things that these players have done before. But now coming to what's probably the most interesting question here, what could you have done with that money that you're now sort of immediately returning to the energy customer? Well, not immediately, but that you are eventually looking to return to the energy customer through lower grid charges. What else could you have done with that money? Well, it buys you roughly 5 gigawatts of additional capacity for a country that is debating about whether we've got enough generation capacity. That sounds like a pretty good use of that money as well. And there's plenty of other things, like you could have invested some of that money into the supply chain, and supply chain is a good hook for some of the other discussions that I've had time and time again since the auction results came out. So before we move on to the next slide, quick thoughts on 3 key debates that I've heard a lot about in the context of this auction. And that's question number 1, will it raise power prices for industrial off-takers? Question number 2, aren't these bids horribly speculative? Will they be abandoned as soon as the winds change? It's gotten a bit of extra sting, that question, based on what's currently happening in the US, what's currently happening in the UK. And then question number 3, aren't these negative bids killing the supply chain? Let's move to the next slide. And let's start off with the question on the potential power price impact here. Some of you will be aware at NERA we did some work for the BWO back in 2022 on the impact of the extra cost that is created by negative bidding. At the time, we looked at the UK examples, and we looked at the proposed scheme that was being debated. We've updated these calculations, and we've updated them both for the new results and the more NPV friendly payment terms that I've mentioned. So here, if that extra cost is being recovered over 20 years, we're seeing an increase relative to the 21 euros per megawatt hour that were debated a lot last year. If they can be recovered over 30 years, then depending on the site and depending on how much was paid per site, and some generic assumptions about the productivity of offshore wind farms rather than a site-specific assessment, we're still seeing significant cost increases. Now I hear some of you say, well, yeah, sure, but costs don't translate into prices. So brief detour into economic theory and pricing and bargaining. If you're a small guy and you're selling into a market where there's a set market price, then sure, that's right. It's very hard for you to pass through cost increases. But if all relevant suppliers see their costs increase, and we're not talking about small guys selling into an existing market, but we're talking about people who are essentially the market for green guarantee of origin backed large amounts of green power, then you've got negotiating power on both sides of the table. You've got big industrial corporates who need lots of green power. You've got big project developers, and if this becomes the marginal cost, then that very well has the potential to raise the price. I mean, anyone who's watched gas prices drive power prices last year knows what I'm talking about when I say increases in marginal cost can have a heavy impact here. So there is an impact here. There's a material risk here that some of that price ends up in industrial power prices. And having a system where on the one hand, you are supporting industrial power prices through taxpayer money, as has been proposed by the economics ministry, and on the other hand, having a system where you're bumping up PPA prices potentially quite materially, suggests that there is potential scope for rethinking what you do with the money that you're taking in here. But I'll leave some of that discussion to Christine at the end. So let me just very briefly come back to the other 2 points. Risk of projects being abandoned. Yes, these projects are taking on a lot of costs through these bid components, but for you to abandon a project, one key question that you'll ask before you abandon is, what's the cost of abandoning? So if we can bring on the calculations on the right-hand side, Germany has historically set very low penalties for potentially abandoning a project. As you can see at the very bottom, He Dreiht, another nearly 1 gigawatt wind farm, would have been it would have been possible to abandon that project and to pay a penalty of only about 30 million until very recently. So very long way through the process. Some of you may remember the paper that we published after the 2017 auction. That cost, by changing the way the penalties is calculated, and by introducing the advance payment, even if it's only 10% of the lease fee, has gone up by a factor of 10 if I'm looking at 022, which is another 1 gigawatt wind farm. So I think the concerns about this being terminated sort of very quickly, they're somewhat overblown, especially when comparing that to the UK auction system, which until the big lease fees came in was LR5 the most recent leasing round, didn't really have any financial penalty. Right. Quickly on the supply chain, do high costs created by the second bid component, do they create extra pressure on the supply chain? Well, sort of other question here. If you're an offshore wind developer and you're not paying second bid components, are you going to go and take your suppliers on lavish dinners and treat them very nicely, wrap them in cotton wool, or are you still going to drive a hard bargain? I think the fact, like, if you want to continue doing your job, you're probably still driving a hard bargain. So I think the impact from the direct developer supplier negotiation, the impact on that is relatively limited. What you could have done, of course, is you could have used some of the money that the state is taking in to build and support infrastructure that then helps make future energy projects cheaper, so that there may well be a double dividend for the German energy consumer as well, because it's lovely getting some money back from the payments this year. It'd be doubly lovely getting some money back this year and having some of the money invested into making future projects cheaper. I think that's another one I wanted to add to the discussion about what you might change. So finally, I'll come to my last slide on putting the German auctions into a context. If all of the above left you with a feeling of, oh my God, I want to bang my head against the wall and German auctions are horrible, you need to bring so much money, can I go anywhere else and make a bargain? Well, pick your poison. There are definitely enough auctions to go take a look and try your luck. And there are certainly lots of auctions in Germany coming up as well. Many of them under the other scheme for pre-developed projects that include qualitative criteria, of which we'll see 5.5 gigawatts in 2024. However, just to pour a bit of water into the wine here, the way the German auctions and the qualitative criteria are set up at the moment, still a very heavy focus on the financial criteria, 60% of the weights on the financial criteria. And it's quite hard to differentiate yourself under the qualitative criteria. So in Germany, I think expect another round of heavy financial bidding in 2024 on both of them. Are there others where you may see a bit less of a focus on the financial bid component? The Netherlands have been a good lock in recent years, where the financial component was heavily capped. Now, the Netherlands is debating a change in how it approaches the financial component going forward, where the cap is 420 million per year for 40 years. If you take that seriously, that makes the German auctions look positively peanuts. The thing that may help you here is the weight on the financial component in the Netherlands is only 15%. So if you're someone who's not that interested in full-on financial competition, you may bid less, but you may still be able to trump someone who bids more by scoring better on the other criteria. So I think that could be an interesting one. The UK is proposing to introduce relatively tight caps on how much an individual bidder can win in the Celtic Sea. Norway's experimenting with various options, not all of them financial, and there are some where you can still input into the regulatory rules, for example, Portugal and Romania. So I'd encourage you to take a look beyond what you can see in Germany. there's plenty of variation in the in the auction rules across Europe. And not all of them will create the same kind of financial shootout that the German ones did. So with that, I shall hand back to Christine to take you through the last few slides on what might change in Germany going forward.
Thank you. Can we go to the next, please? Thanks. Yes, we've seen there'll be lots of international auctions, but also in Germany, things do not stop at where we currently are. So in the coming years, there will more big volumes to be auctioned. You can see here the planned sites for the next years, which are currently set out in the site development plan and with the targets in the Offshore Wind Act. So Germany certainly will remain attractive. And the question is whether or not there should be changes to the auction system to make some aspects work better, maybe. Can I have the next slide, please? We've already heard that other countries use a cap on the bid price. So this might be something that could be considered. And also, as I said at the beginning, we do have this second type of auction already that looks at quality criteria. However, the way this is currently made might not be the best way to actually differentiate between bidders and the quality of their projects. So there might be scope to maybe also look at what other countries do and see if this could be changed for the German auctions. And also the question is whether we really want to maintain the system where part of the sites goes by price only and only another part of the sites includes quality criteria into the auctions. As said, it could also be considered to have a cap on the number of sites or the volume, the gigawatts one bidder can obtain in one round of auctions. This is something that is happening in other types of auctions that the authorities determine beforehand, like how many winners do they, or different winners do they want. Another question that could be considered is the actual size of the sites. There are, as for the other points, there are two sides to it. Of course, for smaller players, it might be easier to have smaller sites where the financial burden from the outset is smaller, especially as you have to wait several years until you see the first money coming in. From the current auction, commissioning is envisaged for the year 2030. And this would allow smaller bidders to participate, and of course they can form consortia, but there's certain downsides to that, and it makes things more complicated. On the other hand, of course, with the large sites, you may have efficiencies of scale, and this may make the development cheaper maybe and more attractive. So as said, there are two sides to that. And then another change that was discussed, but I haven't heard any news on that for some time now, is special rules for industrial supply. So a discussion was started for the pre-investigated sites, if these should be used to provide relatively cheap energy to industrial customers by way of a special auction regime with CFD contracts. And the German Offshore Wind Act already contains the possibility to do a regulation for details of such system. There was a paper by the Ministry of Economics, but currently, yeah, there is some silence, and let's see what becomes of that. So there is certainly room for discussions, and also in the German energy sector, those of you who have been active here for a bit of time, you will know things keep changing relatively frequently. So currently the system for next year looks the same as for this year, but it might well be possible that over time changes still happen to the German auction system. With that, we come to the Q&A session. We have already received some questions. Let me take a look. The first one is nice. What was the rationale to award non-pre-investigated sites based on price, while for pre-investigated sites, it was a beauty contest? It seems more reasonable to exchange the award criteria, as an economic bid is best informed having site data. Yes, indeed, that's a very good question. And the way you mentioned this, namely the other way around, was what was first in the draft law when it was first discussed. And then suddenly, briefly before the law was actually decided on, things were switched around. And when I read the revised draft for the first time, I thought there must be some mistake with the numbers until I realized that they actually switched the system around. And yes, it's hard to say why this happened, because the reasons for the law do not say anything on that. And I haven't really heard a good explanation so far, I must say. The next one, Dominik, might be for you, maybe.
I don't think I can comment on willingness to pay for different sites. I think that would probably go into.
Great. So, will the project have to pay ongoing grid charges? And if so, how much are they per megawatt? No, the projects do not pay grid charges. Actually, the grid costs will be rolled to the electricity customers in the end. And so this is also a difference to some foreign systems that we have here. Criteria for site extension. Maybe this relates to the duration of the lease. If so, there is no fixed criteria. It's just a possibility in case the grid connection would still work, the wind farm would still work, and the planning in place at the time would not provide for a different use of the site at that time. So I think it's a bit difficult to actually know whether or not the extension will be granted, and if so, if it will be for the full 10 years that are the maximum, or if it will be a smaller extension.
Right. I think the next one's for me, and it relates to my first chart, which is the one with the boxes of valuation. Essentially, what the boxes show are the range from the bottom end of the box is the nominal bid per megawatt for the cheapest of the sites. The line in the middle represents the average, and the line at the top represents the most expensive site. There is no NPV calculation in what I'm showing. Then I had a very good question on whether the costs of the bid component are marginal or fixed. And I think here it depends on what we're looking at. If we're looking at the PPA negotiation before you're building the wind farm, then at that point in time, they are marginal to the extent that you have the option of abandoning the project. And unlike, for example, in the UK system, where you've paid the lease fee in the years before you build the project, in Germany, if you abandon the project, you lose the obligation to pay most of the lease fee. So in that sense, they're marginal at the point in time of the PPA negotiation. Obviously, once it comes to the question of generation, they are no longer marginal. They're not tied to how many megawatt hours you produce, but rather they're tied their annual fixed installments at the time. But they should still feature as a marginal cost in the PPA negotiation before you've decided to take final investment decision. That's followed by another question on whether the expectation of high power prices led to high second bid components. I think, sure, increases in power prices help project economics, and without going into any details on what kind of power prices may have gone into calculations, higher power prices help the development of projects under the German system. There's another very interesting question on how you set an appropriate bid price cap, which comes in a couple of stages. The worst thing you can do is send a bid price cap so low that no one's going to bid. Sorry, that's the that's kind of what we've seen on onshore, but actually that's less of a problem here, because we're talking not so much about a bid price as a lease fee cap. And essentially the lease fee cap becomes a political decision. If you're capping the lease fee and everybody bids up to the lease fee, then you're essentially setting a sort of qualifying criterion. If you bring X million to the table, then I'll judge you on the qualitative criteria afterwards. You can also do a hybrid system where you're not capping the lease fee, but where you're deprioritizing the weight that you're giving to the lease fee, which is what the Dutch are doing. So essentially, the Dutch are allowing lease fee payments as high as you like, but the evaluation score that you're getting from massively outbidding someone else are relatively small, given that it's only 15% of the valuation. And I'm very, very intrigued to see whether the Dutch government is going to have the courage to differentiate the qualitative factors so much that someone who significantly underbids someone else wins a concession. I think that's a very interesting question to explore for the next Dutch auction that you're preparing for.
Then we have been asked if, in the light of the current investment amount, do we consider small bidders relevant for such auctions, and would an outcome with small bidders be efficient? Well, it depends on actually what are small bidders. In Germany, we have some companies that really do have offshore wind experience and have successfully started or done their projects. And now there is a certain risk that such players maybe would no longer be successful in the auctions. And I'm not sure if we really want a system where only a limited number of very big players will be active, because there might be certain downsides, even if it could be cost efficient. So the diversity of players was always something that was important for the German offshore wind rules. And I think there are merits in trying to retain this to a reasonable extent. So unfortunately, time is up, and people may need to leave, so we can't answer all questions. However, one question: will this webinar be made available to rewatch later? Yes, it will. We've been recording, and it will take a while to have an agency look at it and make it look nice, but yes, we will make it available. So thank you very much for your attention. We will try to answer some questions maybe in the coming days for those of you who have submitted questions with their names. Otherwise, if you do have questions, our contact details are available at the end of the presentation. That will also be made available. So feel free to send us an email and ask. Thank you very much.
Thank you very much from my side as well.